enthusiasts right around the world. You are here with James on behalf of Pivot Point Trading. I hope you are doing well. We have roughly 10 minutes of trade left in today's session, being Wednesday. This is going to be a market update just to fill in much of the blanks that have been left out since my last YouTube update. I have been rather unwell. 2 people in the Pivot Point Pro analysis class, you are privy to that information. I am recovering. I'm still not 100%. But a lot has happened, obviously, since that last public update. Here I am to give you the most recent take on the markets. Now, again, just to surmise, volatility still persists. What we have seen towards the end of last week was the holding of that bullish trend line. You can see the Dow, it temporarily pushed below it. Yes, we did establish that of a lower low. However, you can see Thursday through Friday, the markets more or less moved very strongly to the upside. We continued that on Monday. And on Tuesday today, however, we are seeing a slight pullback across the board on US market indices. The good news, however, is that the Dow is back above, and it has successfully at this point pushed off from that 24,250 handle. We have been seeing a little bit of bifurcation between the markets, especially with the Dow compared to that of the S&P and the Nasdaq. The S&P and the Nasdaq have, of course, been holding up above their bullish trend lines. You can see on my screen, if we just connect these higher lows, you can see that we are still pushing off from this, and we are pushing back up into this rising resistance area. Yes, we should expect a little bit of a slowdown at this resistance area. This is dating back to, of course, the high watermark in the period of June. You can see that we more or less tagged that. We overshot it, which was good to see on Tuesday, and it makes sense that we are seeing a little bit of selling pressure take place today on Wednesday. We also have this little window that has established itself between the open and close on Friday and Monday, which is interesting. This puts us back down below our S&P 500 bullish entry at 2767, just slightly below that. If we hold this level, this is going to be fantastic news for the markets moving forward, and it does open the doorway ultimately. And boy, am I going to be happy once we say goodbye to this very volatile chapter of trading activity. Once the S&P does potentially see a backtest and then a continuation to close this open window all the way back in January 2018. You can see up here at 2,852. This has been the major narrative really when it comes to our analysis for quite some time. There have been periods in the past where we've been more so rather cautious on the market structure moving forward. Most recently, of course, when we started to see the divergence begin to shape up between the industrial average breaking below the support area and, of course, the continuation, or at least the holding of that area on the S&P and the Nasdaq. But as at the close, or very close to the close on Wednesday, the markets are acting, yes, still in a highly sort of volatile state. We are seeing, again, a rather choppy environment in the world of trading. However, we are still seeing the structure and the general movement, albeit as choppy as what it is, to push us back on up to these upper target areas. Now, on the Nasdaq, once again, you can see we more or less went parabolic towards the second half of last week, especially on Thursday and Friday. Again, we tried to continue that this week, Monday and Tuesday. We're starting to see a little bit of a pull down, again, very similar to the S&P 500, where I've referenced that very slight opening window between Friday and Monday. We've essentially closed out, or at least we've got very close to closing that during today's session. You can see the gap down, which is really interesting. We actually opened where the intra-session low was on Monday, but you can see that the buyers once again have shown back on up, and we do have that of a white candlestick. So we are closing, although it is net negative between that of Tuesday and Wednesday, it is very favorable and positive to actually see a white candlestick develop off from what was a very weak open to trade on Wednesday. So again, you just have to allow, of course, for these markets to continue their rather volatile state. I think this is going to persist rather indefinitely until we see the S&P 500 and the Dow Jones Industrial Average definitively break above their resistance areas. When this occurs, this is going to be sort of a pressure relief for the market, and you're going to see them rally very quickly on up to this resistance area. Now, the interesting discussion that I've opened the doorway into and speculated about over the past couple of weeks is going to happen when we get on up into this open resistance area, this open gap, because this is going to become really the moment of truth for the market moving forward. And it is, as I've already alluded to in this market analysis, it's going to open the pathway really for what's going to sort of occur or set the stage really for the second half of 2018. What happens between today being Wednesday and ultimately coming up here to 2,852 is rather inconsequential at this particular moment in time. If you do see a pullback, it is a good idea to potentially leg into SPY positions. Of the 3 markets, I've made this very well known that Personally, the SPY is most sort of enticing, and for a number of reasons anyway, especially if you're an options trader when it comes down to risk and reward or just open liquidity. If you're looking to trade, obviously, contracts further into the future, and of course, if you're looking for liquidity in terms of strike price in the money, S&P is where you should be gravitating around. It is very different to where the NASDAQ is poised. You can see we are rallying back up and potentially, who knows, even creating that of a double top. I'm not going to sort of exclaim that right here, right now, or say that's what I'm looking at the moment, but it is sort of taking that formation. Not to say that we are going to see a pullback back down to 7.4. Be interesting if we did, but you can just see the difference in terms of resistance structures between the NASDAQ here coming back up to or very close to its all-time high, and the S&P 500 still having quite a decent percentage rally still to sort of price in until we come back on up to that respective resistance area. It looks as though overall, though, the markets are trying to move or do everything that they can possibly do to move back into synchronicity with each other. I've been speaking about this again over the past number of weeks just to see more or less the NASDAQ tread water, and that looks to be sort of the case, or at least what's sort of unraveling before us. You can see if you go back to the beginning of June, we more or less retouched and retagged this area at the beginning of July, and we are still setting up the structures of what appear to be that of more or less a sideways market move. Meanwhile, of course, we've got the S&P and the Dow Jones stealthily playing catch-up mode to the NASDAQ, which is relatively priced up here, very close to our target on the S&P 500. So don't lose track of that at the moment. It has been a rather grueling sort of process, and it has been at times also a rather sort of long cyclical process as well. However, again, once we crack above this, and more specifically, once we crack above the high of Tuesday's candle, we could see this rally very, very quickly, all the way back and up to this resistance area. And then again, this becomes the moment of truth. And boy, am I looking forward to saying goodbye once again to all of this choppy action that we have seen, more or less since the market has based back in the month of February. So things are working. They are, however, working rather slowly. I can also bring up, of course, the transportation, actually, let's move into the Russell 2000. This has been an interesting market because it has gone parabolic, it has sold off, and then it's gone parabolic again. So very similar to what's sort of under construction with the NASDAQ, it is making a rather interesting sort of pattern at the moment. Again, I'm just speculating that we are setting up that of a sideways market move. It would be absolutely fantastic to actually come on up and hit our target. This is not an entry, by the way. 1,726 has been our target on the Russell 2000. This has been since the breakout at 1594 and also the continuation at 1641. Obviously, this needs to be adjusted, but really, if I can zoom out and show you this, these are the decelerating fan lines since the 2009 bottom, which has been really the establishment and the continuation of the macro theme, the macro sort of economic expansion that we currently find ourselves in. And it is also the level of the back test dating back to the year, really 2003 through to when the trend broke towards the end of 2007, which led into the last market correction. So if you actually extend this trend line, I know it's hard to see on my screen, it is rather zoomed out for the time being, but if we just project this on and up into the future, really that's where this target, again, I have to stress, this is not an entry. Just follow this red line here. This is the one I want you to pay attention to. It's coming in very close to 1726, which was our target and still remains our target. Now, if I zoom in, or at least bring this back into sort of proportionality, if I move this up ever so slightly, you can see that we're just adjusting this as we continue further into the future. So I've just moved this up to sort of correlate or align more so closer with that trend line extension, which is going to be potentially a major back test, and who knows, even potentially a major reversal level on the Russell 2000. We're just going to have to monitor this, but at the moment, again, we're seeing a little bit of resistance here. Makes a lot of sense, again, as we see the markets try their best to move back into bullish alignment, or at least Dow theory synchronicity. Now, again, if I bring up the transportational average, we should pay attention to this. It's tried to get moving. However, today, again, much like the trend industrial average, it has turned back down. But the good news is that we are holding a level of support. This is coming in at 10,350. And we have, of course, or at least what we haven't done is broken to what we assume to be that of a next, or at least more so lower low. So you can see the construction of this market, although the candlesticks, especially for really the majority of this week, Tuesday and Wednesday, they haven't been all that much bullish. We are still holding multiple areas of support, and we are pricing in that next potentially high low as well. So if you see the industrial average continue, if you see the S&P 500 continue to the upside more or less from these current levels, again, expecting volatility to be rather persistent, the transportational average is going to, or at least it should play catch up if we are going to see these markets break out collectively to new all-time highs as well. So pay attention to the transportational average. Now, when it comes to our top 12 individual trade list, for a number of weeks, we have been rather defensive. We haven't really actually placed a lot of individual trades whatsoever. I mean, there was, or at least the most recent period of time where we went or at least we had a really good sort of month, was the first half of June. And really since then, we've been, again, rather defensive. And I believe we've been, or at least it's been the right standpoint given the volatility and really the non-movement, the non-commitment of these markets outside of that of the NASDAQ, really. So as you can see, we've got Apple trying to push above 188.91. What a lot of the movements have been today, and you can understand this through just looking at the market indices, is that we are coming back down to close the gap, the short-term euphoria between that of Friday and Monday. So as you can see, Apple gap today on being Wednesday, it's down $2.36, but at the same time, we've closed this gap. The good news is that we're still holding above these exponential moving average, and it fits that of a 1, 2, 3 backtest continuation. So I'm still rather positive on Apple at the moment. You might have to obviously linger through this for quite some time. And big disclaimer right now, we are moving, of course, into the busy period of earnings upcoming. So it is going to sort of potentially get in, or at least place a few obstacles in the face of really nice sort of genuine trade setups, but that's okay, because what we'll do is we'll capitalize, or at least we'll evaluate the trade setups once these gaps occur post earnings. But what we've done essentially today is just close the gap, and if we can hold this level, it does open the door for that of a continuation, much like the markets leading into earnings, which looks to be towards the end of July. We've got Amazon, which is holding up relatively well as well. You can see it's just continuing. But we're not in Amazon. We don't have a vested interest in Amazon, nor do we have a vested interest at the moment in Google. Expect volatility. This, however, is a really positive signal, unlike that of really other major tech companies at the moment. This is an outside day candlestick. It is a Morobozu engulfing candlestick, and it is, pardon me, a very bullish candlestick moving forward. It is technically that of a buy signal. What is interesting, though, is that volume, and as we speak, volume continues to trickle out of Google, and this is occurring very close to, again, that third consecutive retest of this all-time high. So again, I'm not gravitating into Google. I'm not looking to jump into Google. Simply, I'm just leaving this, playing defensive. We have had some good trades off and in Google very recently. You can see here 1050, 155. We also had a very quick bullish continuational signal. This is not over the past couple of days. This was dating back again to that midsection of June, which hit our target up here at 1189. But since we've done this and seen this shooting star candlestick, we've simply been leaving it. And that's been the analysis for a lot of individual companies. And when the time is right, of course, as a market technician and as a competent swing trader, you'll understand when the right time is to jump into a bunch of trade, and you'll understand when the market needs to be left alone. I find myself still at the moment just allowing this market to give me truer signals, so to speak, until I really become rather active, or at least allocate larger portions of capital back into the market. We're rather sort of bifurcated still. You can tell by the candlesticks and, of course, the day-to-day shifts in sentiment showing up with these sell-offs, and then mixed with, of course, engulfing candlesticks, or at least the movements back up to get rid of, or at least to make back those losses that were made in the previous session. So again, when I see this type of activity and some of the other technical signals that we pay attention to, it's best just to pull back and refrain from actually being all that aggressive in the market. But we are still, of course, holding up relatively well, and we're not really seeing, at least in our top 12 list, a lot of these stocks actually break the past lows, which is fantastic as well. It just adds to structure, which is under formation, which is why we're not active or all that much active at the moment, but we will be active when the time is right. Boeing Airlines, you can see we've tried to base off from this 330 handle. You can see a very quick rejection between Tuesday and today, Wednesday, but we do have a spinning top candlestick. Again, reflection of indecision at the moment. This is looking quite nice. Is it good enough to trade at the moment? I would argue no. Personally, I don't have a trade in Boeing Airlines following along, but again, we do have earnings scheduled for this month, so please be aware of that. You can see here, closing the gap, all right? Major disclaimer, really what you can take away from this Wednesday afternoon market analysis is that these candlesticks are doing everything they can during Wednesday's session to gap down and to close the gaps, but there is strength here because we are being bid, the market is being bought, and we haven't actually even closed the gap on Baidu during Wednesday's session. It is a bullish candlestick, but it opens the doorway, of course, for continued volatility to see this gap down if it chooses to do so before it continues to the upside. Earnings, again, later this month. Caterpillar, pay attention to this. Ideally, and we spoke about this over the weekend, we would like to see this sell off a little bit further, sell off back down more so to 130. We do have the construction of a shooting star candlestick. We still have 2 sessions left in today's, or at least in this week's worth of trade. It's going to be interesting. We saw a pop on Monday, but the gains of that pop have been given back. And potentially this may also be a back test of what has been support in the past. So again, bifurcated markets, bifurcated stocks. That's why it's a smart and intelligent idea to actually refrain from jumping into a bunch of positions, even though it does, or at least the market is trying to entice those to do so. Okay, act disciplined, be patient, and the right opportunity will come. We just can't force our hand or force the market's hand at the moment. But you can see that we've negated most of the gains of this week, and we are producing that of an upper wick, or at least through to the construction being Wednesday. Again, earnings towards the end of the week. You can see this theme taking place with a bunch of stocks. COP is doing everything it can to actually break out above this resistance area. However, we noted over the weekend that we do have very tight resistance, 71.05 and 73.76. So again, the pressure is building. We haven't seen the definitive breakout. And even during today's intra-session movements, we were unchanged for the first 3 sessions on COP. So no major surprise there. You're not missing out on anything. You're just playing rather intelligently for the past number of weeks. CVX largely moving sideways. Pay attention to this. It's doing absolutely nothing. A bearish candlestick today. Who knows? Maybe tomorrow it negates all of the losses that were made today. That wouldn't surprise me whatsoever. Don't get caught up in this mumbo jumbo. It's not worth your time or your mental focus. Just take it for what it is and just move on. Really, for the time being, just move on away from a bunch of these trades. I've recapped Google moments ago or a little earlier in this presentation. IBM is still doing everything it can to actually bounce off this 140 handle. This is interesting because we've spoken about this in the past. This major gap here, this was back in the month of April, was earnings related just here. And really since this gap, we've been waiting for a right signal, so to speak, to actually trade this to close the gap. Now, there's no possibility, in my opinion, that we are going to close this gap or that we are going to see IBM close it at 156 prior to earnings. Earnings is scheduled for next week. So although there will come a time when we do close this gap, it's not going to be over the next week's worth of trade. So what we're going to have to do, and as I spoke about, we're going to have to simply leave this. It's good if you did hold positions since earnings. I know a few people who have actually done this. Long-term options, they didn't liquidate them prior to earnings. They've learned their lesson. The hard way, unfortunately, but there is a little bit of life and strength in IBM. However, I wouldn't be overplaying this. I wouldn't be looking to really take a trade at the moment because you're backed into a corner and you have to essentially liquidate that position in under a week, and there's simply not enough time, and that setup just doesn't really exist at this particular moment. Netflix is trying to break above the highs. We do have a bunch of reversal signals in the terms of candlesticks. We've got chart pattern reversals. We've got divergences as well. But even considering all of that, we've got the gap up on Monday. We're holding the gap. And today's candlestick at the moment is that of an engulfing candle. So this is a continuational signal. Again, interesting to point out that volume, is trailing out of Netflix. And if we do see a little bit of a higher high and then a reversal, well, again, that's going to be the continuation and potentially even the confirmation of major bearish divergence taking place and setting up on Netflix. I have no problems, by the way, trading Netflix bullish when the time is right. However, in my personal opinion, with the upside limited on the S&P and the Dow Jones Industrial Average, it's not really all that much of an intelligent decision. And also, we do have earnings within the next week as well. So again, our hands are tied when it comes to an immediate sort of swing trade setup as well. Now, the final stock I want to speak about is Tesla. Tesla here, you can see, is broken the neckline, which appears to be that of a leaning or slanted double top. Pardon me. And it looks as though we've got that of a bear flag under formation at the moment. Also volume trickling out of this stock. So this buy sort of bounce that we've seen from about 300, the holding of this psychological round number, up to about 330. It looks enticing again for the bulls out there. However, I'd simply be leaving this and looking to actually short Tesla if you chose to below the low of this candlestick just here. If we close below the low here and then continue, it opens the doorway at minimum down to about 275. But ultimately, you could see this move as fast back down to 250 per share very quickly. Again, just an update, we do have earnings. This is scheduled for really the first session of August upcoming. So be mindful of that as well. The US dollar today took a bid. You can see it moved rather aggressively to the upside. It's holding the support area. We're still in this sort of choppy market period, very similar to the equity markets. It's interesting. You see the equity market selling off, the dollar rising, and vice versa. But again, this is set up for, again, weakness in commodities. You can see silver and gold in a couple of slides time actually get copped or whacked again today. And, the jury's not out, so to speak, on what's going to happen on the US dollar. It's going to be interesting if we can overcome these two swing highs in this resistance area. If that happens, well, then, look, we're going to have to say that the commodities are most likely going to continue what appears to be potentially that of a short-term bearish trend that we're currently in. We are breaking, yes, a bunch of bullish trend lines, which is going to be short-term painful. However, we're just going to have to monitor this situation. If we do see the US dollar reverse potentially towards the end of the week or even next week, it is going to act as a little bit of fuel and fire beneath the bid of the market for commodities as well. So if I bring up that of SLV, you can see that we got a gap down today. We're coming back down to roughly 1480. This next level of support, this is taking us all the way back to December 2017 levels. And, it's really interesting because, again, if we go back further, You've got July 17 and also dating back all the way to December 2016 as well. We've got a massive coil underway on the weekly chart of these Bollinger Bands. So if I go to this, you can see it looked as though we were getting a reversal 2 weeks ago with a fake Bollinger Band break to the downside. However, this week's candlestick construction, it does look to be a continuation signal, again, Monday through Wednesday. We're going to have to see how this plays out Thursday and Friday. But if we do see a legitimate reversal from this level or from that 1480 handle, this has got everything to suggest that this could be, a few weeks away from absolutely moving parabolic. And you should pay attention to this Bollinger Band squeeze on silver. It is a major signal, but at the same time, it is reflecting that of weakness at the moment, especially after this weekly candlestick construction. And also just to close with, we've got a very similar candlestick here on GLD, sort of an outside weekly candlestick through to the close, or very close to the close on Wednesday. Again, you can see the gap down, another selection of Morobozu candlesticks. We've got 3 interesting candlesticks just here. This little buy, a little bit under GLD, it wasn't really sustainable. It does look like potentially a back test of this 120 handle. But at the same time, if I bring up these oscillators, and generally I reserve this sort of analysis for that weekend class, but you can see here on the daily chart, look how oversold we are. We are getting a little bit of short-term divergence. Again, on the MACD, RSI is coming back into oversold territory. That stochastics is adjusting as well. But what makes this even more interesting is that if we go out a larger fractal, this is the weekly chart now of GLD, don't so much pay attention to price action, just pay attention as to where we are in terms of oversold conditions. If you go out and have a look at this, we are historically oversold. Very rarely do we get down to these levels, and we see such alignment across the board with the RSI, the Stokes, and even the MACD at the moment. And if you take this into consideration with the varying sort of fan levels of what has been that of a bullish trend since 2016, when we get into such oversold levels, generally we see that of a reflective bounce as well. So pay attention to this. It doesn't necessarily mean that we are going to see a bounce. The same is true for silver, by the way. We are just as equally oversold, if not more. But at the same time, we're simply not seeing much activity in terms of buying when it comes to commodities at the moment. And largely that is due to what's going on with the US dollar, being in this sort of state of flux at the moment, holding up between 94 and 95 on the US dollar as well. So this is a work in progress, and we're just going to have to monitor this moving forward. But I hope that's left you anyway with a little bit of an update between what was my last YouTube update and as at really the close, or very close to the close on Wednesday. Again, I'm still recovering, but I am feeling much better as to how I was, especially on Saturday over the weekend. So I thank you for your patience. If you have any questions, please email me, success@pivotpoint-trading.com. Other than that, everyone, I'm going to bid farewell to you. Enjoy your Wednesday evening. I'll be back with you again later in the week for some more market updates. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.